Hey, what is going on, guys? So today I'm going to be talking to you guys about REITs, specifically O Realty Income Corporation. Um, and I'm going to be telling you guys about why I think that they're one of the best investments you can make into a new portfolio or an old one, whichever one. They're a very good long-term investment, very good short-term investment, just a really good investment in general. And I'm going to be explaining to you guys why. Basically, we're going to need to learn about what is a REIT. So as you guys can see here, if you go to O Realty Income Corporation on M1 Finance, it will classify this as a REIT. So a REIT is basically a real estate investment trust. That is what REIT stands for. And essentially what that is it's a real estate company that will buy properties, rent them out to tenants, and then sell them when they're all paid off. And essentially the way that these work is you get a small percentage of the profits that they make. So and REITs, they are basically real estate companies like this. They are required by the IRS to give up 90% of their income to shareholders, 90% of their taxable income. So that means fat dividends for us, basically. And if we go to a 5-year graph here, we could see that the dividend has been paid out very, very consistently over the past 5 years. And we can see also that it is a monthly dividend. So as opposed to most most dividends, they're paid out quarterly, so once every 3 months. This one's paid out once a month, and a lot of REITs are, just simply because they have so much of a dividend to give. And as you guys can see, there's a 3.59% dividend yield here on M1 Finance. And so that's just a really good number to shoot for, especially if you're going for a dividend growth portfolio. So we're going to go ahead and check out a bar graph of the past 5 years. So as you guys can see, it has been fluctuating a decent amount. However, the next page I'm going to show you, I will show you why that is a good thing. So, but mostly it has been an upward trend. There has been some dips every now and again. But if you go to like a 10-year graph, it's been upward trending, a very steady upward trend. 20-year graph, again, upward trending pretty much the whole time. And so yeah, it's basically been upward trending for the entirety of its life cycle. So basically the reason that these little dips are a good thing is because if you look at the dividend, which I'm looking at dividend.com, which is a really good website to do research on different stocks that you might be buying for the dividend, might be buying or holding for the dividend. We can see that they have a payout ratio of 85.7%, which is extremely, extremely good. It is extremely good for a really long-term portfolio, and usually this will get bigger over time. As the company grows and grows, the payout ratio will get bigger. And essentially for most companies, a dividend is just kind of an extra thing that they will do to incentivize stockholders to hold the stock. But for REITs, these are a fairly essential thing. They'll kind of go above and beyond to pay out their dividend, pay it out as reliably as possible. So as you guys can see, an annualized payout of $2.72 per share, and this is paid monthly. As you guys can see, it says it down here in gray. So that's just a really good reason why these are good to have in your portfolio. And I have been trading these for years on Robinhood ever since I was about 16. And they've never disappointed, and they've always been really good for dividend growth. And I think they're just really good for beginners. And it actually turns out that they have a really high rate of return. So most REITs have an average of 11.8% return annually, whereas if you compare that to like an ETF, such as like an S&P 500 ETF and like SPY, it returns an average of 8% a year, and 11.8% is better than 8%. So that's basically that, and just a really good long-term stock to hold in your portfolio. But anyways, guys, that was basically all I had to cover in this video. I hope you guys took something out of this. Maybe if you didn't know what REITs were and you saw the section on M1 Finance or on Robinhood or whatever brokerage you use, maybe you could have taken something away from this and said, oh, well, that's what they are, and this will be a good time to start investing in them. And if you did take something away from it, please leave a comment down below. Please leave a like, And don't forget to ring the bell to get notified of when I upload. And I will see you guys in the next one.